If you could invest in Amazon when it had a market capitalization of just a couple of billion of dollars, would you do it? Well, it looks like Jumia has this exact same market opportunity, however, not in the United States, but in Africa, a massive continent with tons and tons of people in it that is yet to properly adopt e-commerce. Jumia is the biggest e-commerce platform in Africa, and if the e-commerce trend continues and spreads into developing countries, we are likely to see Jumia explode in price. I'm the Max Invest YouTube channel, and if you enjoy the video, remember to like and subscribe. And remember, I am not a licensed financial advisor, and nothing said in this video is financial advice. So let's initiate by trying to understand the business and see what exactly Jumia does. Jumia is an online marketplace for electronics, fashion, and all other goods targeting several African countries. Jumia was founded in 2012 and is headquartered in Berlin. This is pretty recent for a pretty big company. Generally, it takes companies a long time to get off their feet, so Jumia's been moving at a pretty fast pace. It's currently around a $2.5 billion market capitalization. Jumia Marketplace consists of a wide range of sellers, with more than 90% of products being offered by third-party sellers, so they're not really making that much of their own stuff. Most of it's third-party sellers, but you'll notice this number's not 100%, so Jumia do make their own stuff, and in the future they'll probably make more and more, and they have a lot of opportunities to imitate businesses like Amazon and Amazon's model. Jumia Logistics consists of a large network of leased warehouses and more than 200 third-party logistics providers, so it's a pretty massive network right now, and Jumia is a pretty big and well-established company at this stage. Jumia also includes Jumia Pay, which is similar to, say, Mercado Libre Pay that Mercado Libre has, and it generally is quite similar to apps like PayPal or Square or Venmo, similar apps around that area, and Jumia Pay is designed to offer safe, fast, and easy payments on Jumia's platform, and it also offers other payments for users to use. Since Africa doesn't really have that many payment platforms, I do expect Jumia Pay to do very, very well within Africa. Jumia has a wide range of products, so it does tons and tons of stuff, and it's always expanding into new verticals. One thing that it does is food delivery, so it delivers food to people like an Uber Eats. So you can see Jumia is expanding into heaps of stuff and already does quite a little bit of stuff. Jumia has over 6.1 million active customers. This is a stack of customers, and for a company with a market cap of around $2.5 billion, 6 million active customers is pretty solid for the company, and I like what I'm seeing. It has 110,000 active sellers, so it has stacks of sellers on this platform, which means many people are really using it, and it's a pretty big company. It has a gross merchandise value of around 1.1 billion, so there are heaps of goods that are bought and sold on the Jumia marketplace. Gross merchandise value is just the total amount of goods bought and sold on the marketplace, so it's a pretty big company right now. There is currently very low e-commerce penetration in Africa, like seriously low. So if e-commerce penetration gets bigger in Africa, then Jumia will get bigger, and we've seen this trend going throughout the entire world where it keeps getting bigger and bigger. Just recently, e-commerce has exploded in South America and Russia, and it's starting to hit these third world countries. Obviously, Africa is one of the least developed continents in the entire world, and all of its countries are very not developed right now. However, in the next 10 or so years, I do believe it'll become more and more developed, and we'll see more and more e-commerce in it, just like it is now. We can see e-commerce is very low because Jumia is the biggest e-commerce company in Africa with a market cap of just over 2 billion. In America, Amazon is 1.7 trillion and there's other e-commerce companies, so it is shown in this company's market cap right now. So we'll take a look at the financials for Jumia to see if the company is doing well financially. And what you'll notice in the financials is they did struggle with COVID. Most e-commerce companies did not struggle with COVID. Jumia did actually struggle a little bit with COVID, and you can see it in some of the numbers for the year. and it was just basically a struggle with logistics and providing services to people, which is interesting. So gross merchandise value for the fourth quarter was 231 million euros, which is pretty solid, and it shows how you get the 1.1 billion euro figure. However, this is down 21% year over year. And as we can see, all the way back in 2019, the stock price for Jumia was about as high as it is today, a little bit higher, so we can actually see that reflected in the stock price. However, I do believe in the future Jumia has a high potential to continue to grow. So we can see gross profit reach 28 million, so they are pretty relatively profitable now in some forms, and their sales and advertising expenses decreased to around 10 million, which is pretty good, so they're getting more cost efficient. Here are some of the better metrics I like to look at. So, in the year of 2020, while the e-commerce side of the business didn't go as well as planned, Jumia Pay really started exploding, which is great for the business. There was 58% year-over-year growth in total transaction volume or total payment volume on the network, which is some insane growth, and it really shows Jumia Pay is taking off. They did have some good marketplace revenue and some good gross profit growth, which shows they are becoming more of a profitable company. They're also becoming more cost efficient, decreasing sales and advertising expenses, and all of these things are showing me that the company is doing pretty well with its financials at this current stage. If we take a look at its balance sheet, we can see it has a very rock solid balance sheet. Nothing's really wrong with this. It has a 2.4 current ratio. This means it has 2.4 times total current assets as it does total current liabilities, which is very, very solid. And it has a 0.62 debt to equity ratio, meaning it has a lot more total equity than it does total liabilities, which means the company's not at any threat of going bankrupt, and it really has a good balance sheet, which is quite solid for a year where they didn't do as well. So, we'll take a look at some of the competitive advantages Jumia have. The first one is they've only just started advertising in 2020. They just started up their advertising program, which means there's a lot more growth we could see in this company when their advertising program really kicks into gears. They also have a huge logistics business, and they shipped 500,000 packages on behalf of 270 clients. And these clients were no joke. They were big banks and big mobile network operators in Africa, so this looks really promising. They also partnered with the United Nations Population Fund, and it seems like there's a lot going for Jumia that isn't making headline news. None of this stuff is making headline news. No one really knows about Jumia right now. It's listed on the New York Stock Exchange, but it's generally a company a lot of people look over and haven't seen. So it's good to see a lot of these very bullish things about Jumia, and hopefully this comes to light in the future. Now, for my biggest competitive advantage of Jumia, and it's probably one of the most important things, as you can see here, I've got a picture of Africa. Jumia is located in Africa as an e-commerce company. There are no other big e-commerce companies in Africa. Jumia has literally no competition. So basically, Jumia is not competing with anyone. If the e-commerce space grows in Africa, Jumia have so far of an advantage over all of the other competition that they will grow with it. They're already so far ahead. A company, or they are headquartered all the way over in Europe, but they have specifically located Africa to really get growth going. They're so far ahead of all of the other companies, and they experience no competition. And as we can see, Africa is a huge continent. Africa has around 700 million people on the continent, which is absolutely massive. And as Africa becomes more and more developed, which it will become more developed, and we're already seeing Africa make some massive moves in development right now, more people will buy e-commerce, and when more people do that, Jumia will grow rapidly. If in Africa, everyone lived like they did in the United States and it was more developed, Jumia would not be a 2.7 billion company. It'd basically be 100 times the value of that. So I do believe it's got a lot of room to grow. Obviously, Africa's not going to become as developed as the United States is overnight, but they will become more developed, and Jumia will grow with that. So, as I've already said, the management team aren't actually located in Africa. It's all the way down in Germany. So this is interesting for the company, and it shows that they have strategically picked Africa. Their founders seem to have a lot of experience in the area, they seem to be doing quite well, and they hold quite a bit of Jumia shares, and they are generally not selling these shares. They sold a little bit after Jumia IPO'd all the way back in 2019, however now they're tending to hold on to these shares right now. So obviously I've said Jumia is a pretty good company, but there are a lot of risks. In Africa, there are a ton of roads that are very disconnected and countries are very not connected to each other, basically. Heaps of roads, heaps of vacant space, and it's very hard to get around. It takes a lot of time to travel to areas in Africa to deliver their e-commerce needs. So this is a big thing holding Jumia back right now. However, despite this, they're covering a massive amount of Africa and they're pushing through it, but this is a big risk. Obviously, anything in the continent of Africa is inherently risky. There's a lot of political tension in Africa. There's tons of things that could negatively affect Jumia right now in Africa. It's a very war-torn continent, and this could negatively affect Jumia. Obviously as well, Africa's not very developed right now. There's not too much demand for e-commerce, and sure, Africa could develop. However, it's very hard to pinpoint when this growth story will play out. In 10 years, will everyone in Africa be using e-commerce? Probably not. In 30 years, will they? I don't know. When will they? When will Jumia really grow? I'm unsure. So this is another big risk of Jumia, and another decent risk is at $31 a share, they're still valued at growing a fair bit. They've grown heaps last year, and as you can see, last year their share price was beaten down with them being negatively affected by the pandemic. It was all the way up at $30 before out of this picture, but it dropped right down to the $10 range. Now it's right back up. Jumia hit $68 a share, or around there previously, and I thought, $68, this is unfortunate, I'm not going to buy Jumia stock, 68's too much. Jumia then proceeded to drop all the way down into the 30s and even into the 20s. I bought my Jumia stock at around $34, $35. It's now $31. I don't really care. I'm doing pretty well. And I'm pretty happy with low 30s as a price for Jumia. I think this is a pretty solid price to be paying for the biggest e-commerce company in the entirety of Africa. And I think if you can get it anywhere in the high 20s, anywhere in the low 30s, you're doing pretty well. However, none of this is financial advice. We've seen it as a lot of room to run all the way up to the 60s, and it'll be interesting to see where Jumia decides to go into the future. So, if you enjoyed the video, remember to like and subscribe. And remember, nothing is financial advice. Jumia is a relatively risky stock as it's not very profitable yet, and it's playing in the continent of Africa, which is quite risky. However, I do see a lot of upside potential for this stock. I can see this stock getting well over a $10 billion market capitalization in the coming 10 years. So I believe this stock has a pretty good chance of getting 15% year-over-year return for the next 10 or so years. However, it's pretty risky as a company, and I do expect to see a lot of volatility, so I'm just going to hold through the volatility. I'm not selling my Jumia stock unless something fundamentally changes with the business, which I doubt it will. I'm just holding through the volatility, not really looking at my portfolio regarding Jumia or where it goes in the short term. This is a long-term play. This is 10 years, and if it's going well in 10 years, I hope I can hold it for another 10 years on top of that, and another 10 years on top of that to get some real gains with my money constantly accumulating.